and we're absolutely delighted that Petra Hielkema, the chair of EIOPA, has agreed to be with us. It's a real pleasure. Petra, you're following a bit in the footsteps of Gabriele Bernardino, who's been with us regularly every year. So EIOPA has been a very loyal supporter of this conference. Thank you very much indeed, and it's a real pleasure to have you here in your role as chair of EIOPA. Thank you.
Thank you very much, and thank you very much for having me. I'm very happy to be here. Good morning, ladies and gentlemen, and thank you so much for inviting me to speak to you today about supervision in a digital world, a topic that I enjoy very much. So happy to be here. And it's clear that how we manage a digital transformation continues to be a top priority. And when I say we, I really do not only mean industry and supervisors, I mean society as a whole. No one can doubt that digital technology has permitted every aspect of our life, from dawn to dark, home to work, travel, shopping, fitness. There is always an app. And did we ever think that we would sync our toothbrush to our mobile phone? And isn't it just amazing that when traveling for work, I can actually connect with my kids at the end of the day by joining them in their game with my own avatar. Being too slow, that's what they always tell me, but I'm there. So it's no surprise that digitalization features so heavily in the financial services sector, and particularly in the insurance sector, I might say. And as in so many cases, COVID-19 has accelerated that development. Now, this digital transformation is also one that is spreading globally at a fast new pace, with ideas and business models that spring up in one part of the globe and rapidly being developed at scale in another part of the globe. And while in Europe we may not always be at the forefront of every innovation, the depth, complexity, and interconnectedness of our internal market makes it a critical forging ground for the innovations that are going to endure. And it's this very pace and breadth of activity that must be addressed by us as a supervisory community. And in my speech today, what I would like to do is to highlight some of the key trends in the sector that what we see, what's really happening and what's developing, how might it evolve? And then I would like to outline some of the implications for supervisors. How do we adapt to address these fast-paced developments? Because both of these aspects, understanding how technology changes and also how supervision can adapt, are key to fostering insurance and pension sectors to thrive. So let me start with some trends. And I'll have to begin with data. Not only the increase in the amount of data that is available, but also in the growing capacity that we have to crunch those data. Now, the European Commission has estimated that the volume of data produced in the world will go from 33 zettabytes in 2018 to 175 zettabytes in 2025. That's a fivefold increase in 7 years. And just to put things in perspective, a zettabyte is a 1 with 21 zeros. And all that data is driving the use of artificial intelligence, or AI, across the entire insurance value chain, an important trend. From product design to claims handling, AI is already there and more will come. Now, how does this trend impact on the sector? For policyholders, it can actually mean better pricing, more personalized products. Telematics might be comparatively an old technology, but it continues to transform our driving habits and our insurance premiums. From driving safer, we pay less. And in the same way, we can have more accurate premiums being based on actual use and not estimated number of kilometers. In future, perhaps we might actually receive incentives to leave our cars at home when air pollution is especially bad. In terms of new trends, we are also seeing new cooperation models, not only startups, but also with big tech companies and other platform providers. And an example, looking at the global developments, is that Amazon in India has now started to offer car and motorbike cover, having partnered with an Indian insurance provider. And when we are seeing these new kinds of developments, we also see new kinds of insurance offers, peer-to-peer insurance, and new types of parametric insurance, like smart contract-based products. And here, indeed, new technologies are already enhancing the efficiency in the back office of many insurers. Giving an example on blockchain technology, because that's behind the smart contracts. It has an enormous potential in terms of process and cost efficiency, as well as an enhanced customer experience. While blockchain in itself is relatively underused in the European insurance sector and doesn't need, I would say, very much further develop itself, still, our recent report and public consultation shows that many blockchain-based solutions do already exist in the EU, either in full commercial use or in proof of concept stage, and the number is growing. So in future, we could actually imagine that a policyholder with a smart contract is automatically receiving a payment from the travel insurer within minutes after their flight being cancelled. No need to contact a call center and complete a claims form. Or what about a parametric insurance for policyholders that are likely to experience natural catastrophes like flooding, with an amount automatically paid based on the severity of an event that just took place? Now, IAOPA is currently analyzing the responses to our consultation to define the role of insurance supervisors in these blockchain and DLT developments. And we hope to publish in the next week a summary report of all the feedback we got, and then also give a brief feedback on that again ourselves. We will also continue to monitor market activity in this field, being conscious of the opportunities as well as of the risks involved. And there are risks involved like accountability, finality, interoperability, use of energy, and data quality. I'll go on data quality because data quality in general will help insurers to better assess risks, including climate change risks. And it will help to enable and incentivize policyholders to adapt to climate change and to take mitigating action. At IAOPA, we are now currently piloting a natural catastrophe dashboard that identifies the drivers of climate-related insurance protection gaps in order to identify measures that will help to decrease the losses occurred when natural catastrophes happen. Now, a last trend I want to mention, but also need to mention, I would say, when we discuss this topic, is the move towards open finance and more specifically open insurance. Here, the idea is that insurers, together with other service providers, all have access to a person's personal and non-personal data upon receiving consent from that individual. We see that enhanced data sharing through application programming interfaces, APIs, in different products and services is already happening. Like insurance products already offered on airline and car sharing websites, or perhaps a platform where policyholders can already see what policies they have in place, where there is overlap, and where they are underinsured. In the area of pensions specifically, pension tracking systems could actually take information shared by different providers and then give a person a simple and understandable overview of the state of their retirement savings and hopefully help them to make some decisions if gaps are identified. Open insurance is therefore another area that is offering opportunities, but it also requires close monitoring. And so IAOPA is following closely developments and is recently consulted on the topic. But overall, we consider that if the risks identified are handled well, there are certainly use cases for open insurance that can bring significant benefits to consumers. So as you can see, the spread of digital technology across the insurance and pension sector is fast and it is growing. As well as leading to new products and services, rapid developments are also leading to broader societal change, sharing economy, new ways of working, and new ways of saving and investing. Now, as we consider the role of supervisors in the digital transformation, we also need to make sure that we do not ignore these new risks and liability issues that are developing as well. That we have to recognize things like pension and insurance issues for freelancers, for gig workers or mobile workers, and how we ensure transportation, e-scooters, drones, driverless cars. And we also need to realize that we need more interactions with other authorities, for example, data protection authorities. In other words, there's a lot to consider from a supervisory perspective. So where do we start? How do we as a supervisory community keep pace with the digital transformation? Now here I would like to mention 3 points that in my opinion are crucial. First and foremost, it's consumer protection. Remember those data zettabytes that I mentioned earlier? That's a lot of data. That's a lot of data processing, and it's a lot of data sharing. So we need to make sure, first of all, that all data is kept securely, that there is a sufficient measures in place to protect against cyber attacks, against fraud, misuse. And we also need to make sure that people's data is used fairly, that those AI algorithms are free from bias so that people are not excluded from policies or products. Here, transparency and explainability are two very important concepts. Insurers must be able to explain how their algorithms work and be accountable for the systems, enabling consumers to have access to adequate redress mechanisms. And consumers need to be aware of what is being done with their data. And if they agree to share data, it must be a conscious decision to do so. So they need to really be clear on that they are sharing, what they are sharing, and how it will be used. Our consultative expert group on digital ethics has been looking at these issues, and last year they published a set of principles setting out key governance pillars for the ethical and trustworthy use of AI in insurance. It was a very helpful step. That's not all. We also need to consider financial inclusion, and in this case, pretty much digital inclusion. Now, here there are two sides of the story. On the one hand, digital technology can foster microinsurance initiatives, and they can provide insurance to vulnerable groups, mostly through smartphones, and that is a very positive development. But on the other side of we have the story of people who are not digitally savvy and cannot benefit from online offers. We have those who don't want to share their data, and we have those who find themselves priced out of policies because of the amount and granularity of data shared. At IAOPA, we will assess the topic of financial inclusion from a broad perspective and regularly assess our own supervisory and policy work to make sure that we are looking at accessibility and inclusion. Now, another point is that good supervision has to rely on good regulation. And at IAOPA, this means that we have to do all we can to make sure that the regulatory framework is fit for purpose when it comes to digitalization. Now, let me start with AI, because there I think we already have a lot. As insurance is a heavy regulated activity, it will be no surprise that our regulatory frameworks, Solvency II and the IDD, already cover the use of AI. And then we also additionally have cross-sectoral frameworks, such as the GDPR, the General Data Protection Regulation, that provides a sound basis for the use of AI in the insurance sector as well. Now, in addition to that, the European Commission's legislative proposals for an Artificial Intelligence Act will also provide a legal framework for the use of AI in the EU in a broader sense. Here, IAOPA supports the Commission's risk-based approach reflected in that act. For not all AI systems pose the same opportunities and risks, and there is definitely a need for proportionality here. We also believe that any further regulation should specifically take into account AI use cases in insurance. Now, having said that, we're also aware that some of our regulation does not always follow a digital approach, and the well-known example is the requirement for paper-based solutions in IDD and PRIPS. And this is something that could change. I would like to add should change. And our work, I think we've shown that in our work on information documents and benefit statements for the Pan-European Personal Pension Product, the PEP, we chose a digital first approach. And I think here we can learn from this approach and see how we can adapt it to other information documents going forward. More generally, as part of our work to support the development of the digital internal market, we will also assess the needs for change in the regulatory frameworks like IORP from a digital perspective, always asking ourselves how we can address same activity, same risk, and same rules issues while remaining technologically neutral. Finally, we will also assess legal frameworks for the need to protect the industry from cyber threats and attacks. We have long highlighted cybersecurity and ICT resilience as a critical factor, and we will focus our immediate work on the implementation of our recently adopted cloud computing and ICT guidelines, as well as the implementation of the Digital Operational Resilience Act, DORA. After all, Success of digitalizations, particularly in our sector, will very much also depend on trust and security. Now to my third and final point. We need to build our own skills as supervisors. On the one hand, this means looking at technology itself for more agile and efficient supervision and regulation. Here I'm talking RegTech, SubTech. On the other hand, this is about how we keep pace with the technology developments. This is important to make sure that consumers remain protected, but at the same time that our approach to supervision fosters rather than hampers innovation. Consultation, cooperation, and dialogue are central to this. Now, we have found that close stakeholder cooperation through forums like the European Forum for Innovation Facilitators will help us as supervisors to understand new technology and tools, and it helps innovators to understand what we as supervisors find important. And the earlier in the process that we find each other, the better. We also cooperate closely with our sister European supervisory authorities, EBA and ESMA, and I'm actually quite pleased to see both the chairs of the other two ESAs on the agenda of this conference. We work together on digital finance issues, and earlier this week we actually published a joint report in response to the European Commission's call for advice on digital finance. In this context, our overall recommendation is rapid action to ensure that the EU's financial services regulatory and supervisory framework remains fit for purpose in this digital age. And of course, we work closely with our colleagues at the international level, and in particular in the International Association of Insurance Supervisors, where I have the honor to chair the FinTech Forum. Now, let me conclude by saying that when EIOPA first started to work on digitalization, it was sometimes seen as nice to have or, a means to provide better consumer experience. That has changed. Digitalization is an essential part of insurance and pension sectors and on everyone's agenda. In light of this, to bring together all strands of our work, we recently published our digital transformation strategy. The strategy sets out how we at EIOPA can contribute best to the sound transformation of the insurance and pension sectors in Europe, and the points that I have outlined today are very much part of that strategy. And if I had to summarize, I would say that we want to support the market and the supervisory community through this digital transformation, because this is what we need to do if we are to make sure that digitalization and financial innovation works to its full potential. And with that, I conclude. And again, I thank you very much for having me today.
Petra, thank you very much indeed. It doesn't surprise me why the IAIS has made you the FinTech champion, as it's called. Seeing this, it doesn't surprise me at all. And coming from Northern Europe, it doesn't surprise me either, because that's a part of Europe that's much more advancing on digital developments. We've got a number of questions, and if you agree, I just ask you a few on some of the things that have come up. One, maybe at the beginning philosophically, when it comes to risk management, you say technology is really helping with risk management, insurance when you drive, much more user applications. But it also challenges the universal principle, the solidarity principle of insurance. The more you go down effective risk management, the more you can price things, but the more you take away that concept whereby a collective group covers the risks of individuals. How do you square that circle, which is so fundamental to the whole concept of insurance?
It's, of course, I think, yes, it's a philosophical question. So thank you for asking it. And at the same time, I think it's a very question that is one that is on our tables, or should be on our tables constantly. And I think here ethics play a very important role. Also understanding indeed that one way in which we as a society manage risk is by sharing those risks. Now, I think that there are good assessments of the risks that are there based on the data, but then there is the next step on what we do with those assessments and how we will use those data. And I think here ethics comes in. I know already many insurers have ethics boards to look at to what extent will we use or not use the data. And I think that question is not only answered within those groups, but it's also very much part of society and the acceptance within society and the extent to which society wants to share risks or not. But I think overall what I see, at least so far in Europe, that there is depending on the product you look at, absolutely a willingness to share risks and to play a role as insurers to do that in the most efficient way. But it will definitely involve dialogue, and it will involve strong ethics, and I think a good antenna of what is needed in society, but is also what is acceptable to society.
You capture what is a common theme. Really, supervisors have to become more granular in their approach of understanding things. Technology forces maybe a new level of complexity in the approach. It won't come to you as a surprise that some of the questions coming in, it was also on my mind, is around AI. You talked a lot about AI. One thing is that we know, and you mentioned the EU AI Act, looking at where the discussions are going, at least among the member states, they think or seem to go in the direction that insurance is a high-risk activity per se. I think from what I hear from you, it's really more on a case-by-case basis. But I'd be interested in your views on that. And then secondly, in your digital transformation strategy that you published, as you say, just a few months ago, I think December it was, you looked at governance principles. So how supervisors can look at AI from an insurance perspective. And I think a follow-up question would be, how do you see the interrelationship between the AI Act as a horizontal piece of legislation and the day-to-day work that you are envisaging as IAOPA in the insurance space?
Yeah. I also hear the questions from industry with how this will interact, and indeed what should or should not, and to what extent should AI be included, insurance AI be included in the Insurance Act. Where we are in our thinking is, I think, and I'll address the two issues separately. I think we need to carefully look at the lines of business in insurance and do that in a proportionate way. If you look at the AI as the text right now stands, I think if you look at financial services in general, there are these products that really look at indeed data of individuals in order to make a decision whether or not to insure someone, or to and when it comes to life or health, these kinds of products. And here I think we need to consider how AI is used and whether or not it is critical. And I at least I think it is positive that we have this consideration currently on the table, and that we make a conscious decision on what needs to be done. Having said that, I think it is very important to realize that when it comes to the use of AI insurance, already a lot is being done, and I mentioned that in my speech. We already have Solvency II, we have IDD, and I think supervisors, if they are maybe looking into how to deal with AI, I don't think it's that much because we lack supervisory powers, but it's because, again, you need to keep up with the pace of the developments. And so here I think it would be very helpful if in the Act itself there is a link to the work that is done in IAOPA and how that should then work together. But there is a recognition that there is a supervisor that is also dealing with this. While indeed, if there are very critical, use of very critical AI, you could include it separately. But I think in general, you would like to include the fact that there is a supervisor who already is looking into the matter, and to make clear from the outset what the interrelation is there.
Yeah, I think you make a really good point, because I think the industry is struggling, not just the insurance industry, because we've got operational risk as part of the prudential framework. We've got in the insurance space the whole author framework as to the governance and management of risk. And you then on top of that have all the conduct rules that are already in place. So you can ask to what extent AI adds complexity to that. Very interesting indeed. I think you also touched on the kind of guidelines, ICT resilience guidelines, or I call them the outsourcing guidelines. Effectively, IAOPA took the lead for the three ESAs in that space. It's always good to see how the three ESAs work together. I entirely agree. But I see a little bit of division of labor, and IAOPA kind of took the charge on these issues and on open finance. I might be finished on open finance. But You also referred to DORA, and I think, where do you see the interrelationship? Because I think the industry is, maybe you can't answer that, but there's a feeling in the industry that these guidelines that have only been adopted 2 years ago or so will have to be rewritten, reassessed in the light of DORA. So how do you see that process?
Well, what I see is first of all, that it really is a critical topic, and with DORA still being developed, and we cannot wait for DORA. So I'm happy the guidelines are there. I believe, in all honesty, I mean, thank you for complimenting IOPA, but I'm very much aware of, particularly in the banking area, also a lot of work being done in this field. And I think in general, the entirety of the financial sector has to work on its resilience. And given that value chains become longer and longer, also through outsourcing, this is a key part of how to assess these risks. Now, what I think, if you have the supervisory approach that starts with the license holding entity, and then through outsourcing rules deals with ensuring that we are a robust industry, and we need to be, that is the one approach. The DORA approach is more that you look at it more from a financial stability perspective and say, okay, what if we don't go through the value chain to the critical third parties, but what if we start at the critical third parties? So in that sense, I think it's a logical additional step in a time where, for the financial stability and robustness of our industry, some third-party providers become really critical. So including that in the overall package, I think is a very good step forward. Having said that, I do see that once we have DORA in place, we will need to consider how the two functions, how the two interact together, and that might require some changes. Having said that, I think that much of what is in the guidelines is really just common sense, as an industry, recognizing the need to be resilient, robust, and really in control of your operation when it comes to these IT risks.
Maybe let's finish on where maybe open insurance, or should rather talk about data spaces, because you're right, the open insurance piece is primarily customer orientated, and you described it in that way. And it's interesting again to see EIOPA take a bit of a lead in that, with a whole panel on that yesterday coming from the PSD, so the other side, looking at this. But in a way, insurance also benefits much more from potential data spaces where it's not just personal data, but also non-personal data, be it ESG data, as you said, climate data, all kinds of environmental data, looking at traffic data, health data, now particularly important after, after maybe Freudian slip, or wishful thinking, hopefully towards the end of the COVID health crisis. How do you see that element, the ability of companies, supervisors, authorities to share data, to improve risk management, and how can that be structured appropriately, and what role should EIOPA play in such a process?
Yeah. Well, I think you touched on the right, I think on the right angle. There's the consumer focus, and I must say here, and I'm happy that you had the PSD2 on the agenda as well. I was director of payments when PSD2 was introduced, and yes, there are a lot of benefits for consumers, but there's also a lot to consider. And risks to consider, practicalities to consider. So I think that there's a lot to learn from PSD2 when we discuss the broader range of open finance. But going into what insurers, again, maybe going back to my answer on the first question, in a proper and ethical way could do with data, if done in a proper and ethical way, they could really benefit indeed consumers. And some of the examples I was given is that when you have a lot of data on, for example, I understand already in the US on hurricanes, then insurers are able to really quickly assess what damages need to be paid to whom when a hurricane has unfortunately come by, and at least help consumers to not worry about that. The interaction on those data, there are some challenges there. I think it's first of all, it's how to make it interoperable, how to share. Are you willing to share? It also has to do with data quality. As supervisors, the set of data we have, there's a lot of validation before we actually work with those data. And I think we have to be conscious on what data we use and where it comes from, and then what the quality of that data is. So in general, I think that it's not just about connecting and getting the data in, but it is very much also about considering what kind of data do I have, what is the quality, how long is the range, before you really include it in your model. So here's a lot of work that still needs to be done. But I think going forward, it's a trend. I welcome the initiative of the Commission now to develop ASAP, which is a single access point for investors to find data in the EU. I think that's a positive step. We will see more, but I think my current focus on there is, besides practicalities and confidentiality and agreeing on that, assuming that the basis is ethical use, is very much the data quality and how can we be sure that data that we are actually using in making an assessment, drawing conclusions, or doing comparisons is good data.
Thank you very much indeed. And maybe we come back to that, the Data Act, EU Data Act as a proposal is coming out in a few weeks' time. And I see José Manuel is already moving a step forward, looking at the use of data in internal model development. So we're kind of moving in that direction. That's why it's an annual conference. I think we can kind of rest assured that we'll have a lot to talk about in a year's time. In the meantime, Petra, it's been a real pleasure. Thanks for being with us. And good luck both in your work in EIOPA, but also what is very important for us at the global level. Thank you very much indeed.